welcome to the Bottom Line Extra here on TVP World. I'm your host, Marie Cato. There's a lot happening now in Europe and all over the world. Trade wars, single market reforms, new funding for defence. To provide us with more insight on the current developments, I'm pleased to welcome Professor Henning Vöpel, Director of the Centre for European Policy. Hello, and thank you very much for joining us.
Thanks for having me. It's a pleasure.
So let's start with your insight and comments regarding the EU's spring economic forecast. We have lower growth forecasts than in the autumn of 2024, but also some positive outlooks for 2026, when EU growth is expected to rise by 1.5%, but that's only in 2026. What are your thoughts?
Well, of course, I mean, we are talking about business cycle dynamics, and this year it's revised downwards, and next year it's a bit up. But this is a typical business cycle dynamic. But I think it's more important to look at the structural problems the European Union has. And that is due to an underinvestment in technologies and the stock of capital in Europe. So over many years, and that causes the problem we have. So it's more about the rate of potential growth rather than the business cycle dynamics, and that puts severe problems on the European economy to benefit from a recovery from the problems we have in the global economy. I mean, talking about tariffs and the uncertainty that puts on European firms.
And on Wednesday, the EU Commission released a strategy working towards boosting the bloc's single market and yet again a way of eliminating anything that gets in the way of trade between the 27 member states, goods and services. Is that going to safeguard the impact of the tariffs imposed by the US, and if so, to what extent?
Yeah, at least that is one important pillar to answer the tariffs conflict we currently have, and we are probably right at the beginning of a wider tariffs conflict globally. And so yesterday, the Commission has published and announced a single market strategy. And there was a recent study from the IMF saying that all the internal barriers in the European single market sum up to a burden being equivalent to a tariff of almost 45%. So there's a need to bring down the internal barriers, and I think it's a good way and a good policy measure to do that, and to bring forward a policy or a single market strategy that is urgently needed in order to strengthen the single market in Europe, and that could be one answer at least for to the tariffs conflict we have on a global level.
Do you think that there is as much enthusiasm for ideas like this as suggested on paper or perhaps expressed at press conferences? Because at the end of the day, there is a sense of rising Euroscepticism. Countries are feeling more protectionist. The sense of positivity and enthusiasm to the EU is at the end of the day dwindling a little bit.
Well, that's a good question. I mean, we have been at this point for many years and many times, and obviously we haven't done enough in order to remedy all the conflicts and the market failure, especially with regard to private investments. So again, as I said in the beginning, we are heavily underinvested in terms of private investment and the stock of capital and technologies and business model innovation. But the current circumstances are different from the past years. So now we have a global economy that is characterized by a comeback of autocracies and populism, putting pressure on democracies. So I think we face a triangle of global disorder consisting of fragmented global economies and markets on one hand, on the other hand, a multipolar geopolitics and an uncoordinated macroeconomic policy, so forming a triangle of global disorders. So the pressure on the European Union and democracy is very high, and that could probably lead to a good answer. So enforcing a single market strategy that has not been done in the past.
And to what extent do you think that the economic situation in the US will impact the situation here in Europe? Because there was some talk about a US recession. Do you think that now this has subsided, or is that risk still somewhere there on the horizon?
I think the risk has not disappeared. It's still on the horizon. I mean, we are talking about very fundamental rebalancing of the global economy that could easily lead to deleveraging of global capital markets. I mean, we are talking about a de-dollarization, so the trust in the US dollar as the most important currency in the global economy is under pressure, and that could help, of course, the euro to push the euro. So the recession, or the prospect of a recession in the US is not gone. And that could probably redirect capital flows into the European Union, and that could probably help also to finance those investments we are seeking to invest and to undertake in the upcoming years.
So if that US recession happens, what does that mean in a practical sense for Europe?
Well, first I would say that would put the global economy under pressure, and of course there would no excuse or no how can I say? So also the European Union would be impacted by a global recession. So that would be bad, of course. But looking at the more structural rebalancing of the global economy, the European Union could benefit from that rebalancing. So we need again to focus on structural reforms in order to strengthen our economy, the capacities to innovate, to reform our institutions, and that would help to gain from a broader rebalancing of the global economy beside the business cycle dynamics that is also unfavoring the European Union, of course.
So as much as that would be a difficult situation, are you saying that it could pose an opportunity as well?
Absolutely. I mean, putting that into a broader context, we see, well, again, the rebalancing of the global economy. So it's a huge shift, not just in geopolitical power, but also in economic power. But that requires that the European Union is willing to invest more and to act more strategically in investing in new technologies. And that could lead to a shift back to the European Union. But that, of course, requires a political will. Whether we have that or not, you have been speaking about enthusiasm. That is certainly required in order to push the European Union towards that direction.
I wanted to ask about the next EU budget because it is a bit of a contentious topic. It evokes a lot of tension, and as Ursula von der Leyen describes it, the new normal is anything but normal. What would you point to as the greatest cause of change that the EU has to focus on and adapt to from here onwards?
Well, I think it's about openness. We must see that protectionism is back on the global agenda. So trade schemes and trade patterns will change, and also supply chains will become more fragile. And we in Germany, as well as in Poland, we benefited from more or less stable global supply chains. That is over. I mean, heading from a rules-based multilateralism to a more power-based bilateralism. That is a huge change for the European Union. That is, something that is at the core of our order and understanding of what the global economy should work like. So that means that we should be more open and to create more possibilities and opportunities, also in terms of trade patterns and new trade connections. So I think that is a reset of the understanding of the European Union. So it's a more external behavior and policy making that is more important than looking inward to optimize the internal market.
But the future multi-annual financial framework and the cohesion funding will be slashed. And how do you think that will impact the EU overall?
Well, it is very important to find a strategic angle to the long-term financing of investments. And of course, I mean, we are talking about defense sector. Yesterday, also the SAFE program was announced. I mean, to raise 150 billion euros in order to foster defense spending in the European Union, to become more resilient, to create capacities in terms of innovation. So that would help to recreate the European economy. So that is very important, to find a good package with which we can finance all those investments that are urgently needed in order to exactly recreate the European economy.
But how will countries like Poland, for instance, or other countries in our region, how will they cope with the cohesion funding?
Well, I think national policy should be focusing on how to benefit mostly from that cohesion funding, and that means to form a common strategy, not just from the perspective of a national member state, but also to integrate into European public goods. So talking about defense and basis technologies that are very important, and doing that, all member states could benefit from an overarching European strategy.
And you mentioned earlier about the SAFE mechanism, a new instrument for member states to borrow for purchases of military equipment. This is a seismic change in how the EU sees the European funding. But do you think that this fund is sufficient?
No, it's not. It's just a beginning. It's not a start to coordinate the spending in the European Union that is urgently needed. I mean, we have so many different weapons and systems of different technologies that investments in defense is highly inefficient. And by coordinating those spendings, we could getting those those investments more efficient. That is just a starting point. The numbers are too low, of course, but that's what the European Commission cannot do. I mean, that's still the task of the member states to invest in defense. But what we can do on a European level is to coordinate defense spendings in order to create efficiency.
And in your paper that you contribute to the European Financial Congress, you mention two new global orders that are conceivable today. Can you just very briefly tell us about them?
Well, on the one hand, we could imagine that we move towards what could be called a multipolar global order, or a bloc building between autocracies and democracies. So that would mean that on one hand, we would probably create a reglobalization, and the other model would probably more lead to a deglobalization. And the outcome would be very different for obvious reasons. I mean, 100 years back ago, we had a deglobalization leading to economic and political catastrophe. So we should learn from that and avoid a bloc building between autocracies and democracies. And that in turn would mean, especially for the European Union, defending the meaning of the European order, to support a rules-based multilateral order, so to remain open to everybody in the global economy would be helpful in order to head into what could be called a reglobalization.
Okay, Dr. Henning Vöpel, Director of the Center for European Policy, thank you for joining us today.
You're welcome.
And many thanks for joining us for the Bottom Line Extra. Make sure you join us for our regular episode of The Bottom Line today at 5:10 CET. And in the meantime, for the latest in regional business, follow us on X and on tvpworld.com.